Good morning, and welcome to the ILA's first Library Trustee Forum Spring webinar. My name is Linda Lynn, and I am the secretary for the ILA's Trustee Forum. I'm also a trustee of the Glencoe Public Library. Every spring, the Library Trustee Forum invites experts to share their wisdom with Illinois trustees in a series of 3 webinars. These webinars are recorded. On Monday, you'll receive an email from the ILA with a link to the recording, the slides, and evaluation. Your feedback will help next year's forum board to continue to offer engaging and informative workshops. I'd like to tell you a little bit about our speaker, Jamie Recklin. Jamie is the founder and president of Meristem Advisors. Jamie provides Illinois municipalities with financial reviews, planning, capital planning, budgeting, and revenue forecasting, as well as municipal advisory services for issuing bonds and borrowing. He also helps clients with various special projects such as wage projections and staffing strategies, strategic positioning, district formation, and trustee education. We're really excited to have Jamie with us today. If you have questions during the presentation, you are free to use the chat option to put yourself on camera to ask the question or to raise your hand, and we will be monitoring for questions and asking as we go along. So without further ado, Jamie.
Thank you, Linda, for the introduction. Good morning, everybody. I greatly appreciate you taking time out this morning to learn a little bit about budgeting and library financial practices, which I've worked with a lot of libraries on. So it's fun to be able to do this and share some of the accumulated knowledge that I've gotten here. So without further ado, we'll get into the presentation. And I think, generally speaking, the overall objective of this presentation is to give you a sense of the breadth of financial responsibilities that trustees have for the library and the types of things that you should be thinking about as you approach financial issues over the course of the year. And so, little disclaimer, I'm not giving you advice in this presentation. You have your advisors. You might want to take some of this information to them. If you want to probe certain things further, you can also always come to me as well. But take this as information to be taken back to the library as opposed to specific recommendations. All right, so we're going to cover a bunch of different areas, and we could spend easily an hour in any one of these different areas. So we're really just giving you a flavor for questions that you should be asking, things that you should be thinking about today, and maybe some background in approaching each of these issues. We're going to talk about the budget. We're going to talk about the levy, which is always a big focus for the board as it comes towards the end of the year and you're preparing for next year. We'll talk about fund balances, what's appropriate, how much money should you have just on reserve in the library. Financial policies, investment policies, fund balance policies, things like that. A little bit about internal controls because fraud is a very high profile area right now. And I'm fond of saying that if your library hasn't been a victim of fraud yet, it's only because your library hasn't been a victim of fraud yet. And then lastly, how do you work with your library director and what's your role in the financial responsibility for the responsibilities of the library? So, okay. So super important here in our discussion because it's going to inform a lot of the discussions that we're having is to know what kind of library you are. And by that, I mean some libraries are district libraries, independent of any municipal government, and those libraries are governed by the Illinois Public Library District Act. And then the remaining libraries might be city, village, township libraries. They're municipal libraries, and they're governed by a different act, which is just the Illinois Local Library Act. All right. Now, you can go and read these laws, and I think it's kind of a good idea. A lot of the things you'll hear anecdotally come directly from the law. It's not very long. You could spend a half an hour and go through it, and you'd understand, oh, this is why they say this, or what, this is why I'm being told that, because it's all right there in the law. It's worth your time if you have a minute to pull those laws out and just go through them. Um, if you're a city or village library, you might be part of a non-home rule governmental unit. Okay, so if you're part of if you're a municipal library and your governing library is home rule, it gives the library a lot more flexibility in its authority for taxation, things like that, that you wouldn't have if you were a municipal library that is not part of a home rule municipality. So for each of you, you should know, you should figure out, am I a district library or a municipal library? That one's pretty easy. But if you're part of a city or village library, you want to know if that city or village is is a home rule municipality, because knowing that is going to give you a lot of uh, insight into how you have to approach your levying and your financial responsibilities. All right. Um, Lastly, I guess it's worth just mentioning, most of you that are municipal libraries have your own levy calculations separate and apart from the municipality. And so that, but some of you, your levy is just thrown in with the municipality. So there's another question you want to ask is, do we have our own separate tax calculation, or do we get mixed in with the municipality? So these are really questions that you have to answer. Hopefully you know the answer to these questions as we go through the presentation today, but if not, when you go back home, maybe get the answers to those questions so that you have a little bit better idea of how to approach some of these questions we're going to talk about today. Okay, so what's your job as a library trustee? All right. Your responsibilities are more high level, and the more I can get you thinking about it from that perspective, the better off we're going to be. So, you're hiring a qualified, competent director to manage the library finances. You aren't directly managing library finances. You want to approach the budget from a goal-oriented perspective, right? And then you're enacting the appropriation and the levy each year, the things that generate the money for the library that then goes on and gets used in the actual operations. You want to set expectations and priorities. How do we want to operate? What kind of financial balances should we have? High level stuff. Establish strong financial policies. Make sure your structures are in place to protect the library against fraud. The overall financial strategy. Are we accumulating money? Are we using money that we have? Um, and then you want to monitor your financial health during the year. You want to make sure that you always have the resources that you need to operate properly, that you're staying within budget, or that if you're not within budget, why that would be, and is that okay? And then lastly, and possibly most importantly, you're a trustee. You are elected by the community. But your fiduciary duty is to the library, which means that you want to make sure the library takes advantage of all of the resources it legally has access to in order to operate on the community's behalf. All right. And sometimes that fiduciary duty gets clouded by concerns over, are we taxing too much, things like that. Not saying that those shouldn't be thoughts or concerns, but it's important to remember your first duty is to the library. And if you can if you can access resources, if you through the levy, through grants, through other means, you should be accessing those until such point as the library director says, I can't really make good use of these resources anymore. Maybe then it's time to start looking at backing off on a levy. But in the meantime, um, your first objective should be to understand exactly what resources the library has access to and make sure you're availing yourself of those. All right. Um, we often talk about board roles and trustees in terms of an hourglass, right? The board sets the financial big picture. You've heard me say big picture 16 times already, and the overall direction of your financial activities. The library director takes those guidelines and then implements them with the staff, and the staff actually implements. Okay, so the board directs, the library director interprets and creates the plan for achieving that vision, and then the staff implements. I like this model a little bit better. If you think of the library as having a ladder, and you have staff and the library director climbing up and down the ladder all day long, right? It's the library board that's holding the ladder. And if you, as members of the library board, ever find yourself climbing the ladder, that's a problem because at that point, no one's holding the ladder and the ladder's going to fall over. And I've seen that many times. Often I'm called in after the ladder has fallen over. People are saying, "How did this happen?" Um, but you give the library stability so that it can operate, so that the staff can be the ones climbing up and down the ladder all day doing their jobs. All right. So I like that visual better than the hourglass. All right. So before we get into sort of the specifics of some of these financial policies and concepts we're going to be talking about, it's important for us to get on the same page together. So some terms I'm going to use, which are very important. Revenue. Revenue is money received by the library. That's anything that's coming into the library, but recognize that for most of you, about 90 to 95% of your revenue is going to come from local real estate taxes. Now, one other thing I want to mention here, revenue is not money that you already have. Okay, some people look at fund balances, dollars in their bank account, and say, oh, that's our revenue that we can use. All right, getting away from that because that can be very confusing. I want you to think of revenue as money that's coming into the library as it comes in over the course of a year. That's your revenue. And the way you, as I said, the way you get most of your revenue is through the levy. And we're going to come back. I'm going to skip over levy for a minute. We're going to come back to that later on. But that's basically your annual request to the county for real estate taxes is your annual levy. All right. Now, on the expenditure side, expenditures are any money that you're spending over the course of the year. It could be for anything: payroll, utilities, collections programs, anything you're spending money on, including capital needs. You fix a wall, you fix an HVAC unit. Those will all be considered expenditures. Some are annual, some are periodic. Fund balance is, as I was mentioning before, is fund balance is the dollars that you just have, right? Those are the dollars in your bank accounts, all the accumulated dollars that you own. For purposes of this discussion, we'll call that fund balance. Remember, that's revenues can help increase your fund balance, right? But once you have those dollars, their fund balance, expenditures are going to decrease your fund balance, right? So as the dollars go out, your fund balance is going down. So fund balance, think of as that the dollars that you own. All right. Your budget is an annual um, accounting of your revenues and your expenditures for a coming year. So it's your expectation of what revenues you're going to have and what expenditures you're going to have. We're going to talk a lot more about the budget as we go along here. All right. Now, again, sorry to inundate you with definitions, but if we don't do it up front, it's going to get confusing as we go along. All right. Now, most of your activities, all right, as you get your revenues in, as you make your expenditures over the course of the year, that's going to be done in your operating or your general fund. All right. So Money comes in, it's going to go into this one fund called general fund. You're going to spend it. It's going to go out of that general fund. That's where most of your activity is reported. But some of you may also have special funds that are for specific purposes. So, for example, if you're getting money for Social Security, for IMRF, for liability, and you levy for those things individually, right? You're going to keep track of that money separately. And so you have your operating fund for most of your stuff, but then you might have these other little individual funds as well. All right. Um, those are your operating funds. That's money that's coming in, it's going out annually. But then lastly, you might have, and if you don't, you might consider creating one. You might have a special reserve fund. Some people call it a capital reserve fund. And that's where you accumulate money for future capital needs, right? So things that if you want to save up for something that might be happening down the road, such as a roof repair that you need to pay for in 5 or 10 years, you want to accumulate money for that purpose, you might set up a special reserve fund. And I think it's a great idea where you can accumulate money so that by the time that big expenditure comes along, you've got money to pay for it. All right. Um, now, sorry. Again, I apologize for threat. We're going to take a pause after this page and just let people ask questions if they want. Um, Now, your library director is going to present you with a budget each year. That's going to be, we're going to talk about this more, but that's your expectation for revenues and expenditures over the coming year. You're going to pass as a library district. You don't have to worry about this as if you're a municipal library, but if you're a district library, every year you're going to pass something called an appropriations ordinance, right? It's unfortunately called the Budget and Appropriations Ordinance. But that's not your budget when we get to this conversation. That's simply a statement of the maximum dollars you could possibly spend on any given budget item. And it's something that the law requires you to pass. But when you see that budget and appropriations ordinance as you go through the year, usually June, July, August, you have to remember that is not your budget. That's separate, it's apart, and it doesn't reflect what the library is actually going to do. And then lastly, definition here that's going to be useful is your audit. Annually, most of you, libraries with a budget over $850,000 have to have an audit. And that's required by law. And it's a recap, very useful recap that's often glossed over of all the activity of the library over the prior fiscal year. All right, so that was a lot of definitions. We're going to use these a lot. So if anyone has specific questions about any of these definitions, maybe we want to take just 1 sec to give people to ask an opportunity to ask.
Yes. Oops, hang on. So we have a question in the Q&A, Jamie.
Yep.
Can you provide an example of the ladder falling over because nobody was holding it? So going back to that that very visual diagram that you gave us on the prior page.
Sure, absolutely. So what happens often, a couple things. The one that comes to mind is where staff come directly to a trustee because they're having problems with an issue that's been, taken up by the director and they don't like the results. So they go to the trustee and the trustee gets involved with trying to solve the problem. So that takes authority away from the library director who really should be managing all of those things. And it calls into question the library director's authority. And all of a sudden, you have a lot of disruption in the operations of the library. That would be one, that's probably the most common example that I can think of. A second one is where, more related to finances, is where a library trustee wants to start getting involved with decisions about how money is being spent, right? And tries to direct the application of budget monies. And once again, the board's role is just to say, here, we've allocated this much money according to the budget for these types of programs. When it gets down into exactly how money gets spent, right? That's really the library director's role, working with staff.
Terrific, thank you. Second question, is the audit for a municipal library included in the municipality's audit?
So that depends, and it's a great question. I love it when my municipal libraries have their own audit. Because it's a complete record of everything that's gone on at the library, and it's very helpful. Very often, though, the library is just reported as a component unit of the municipality. So it'll be, buried in the pages of the municipality's audit. I don't love that because it's not as much detail. Um, but I don't know of any specific rules that say when which happens, right? When it's reported as a component unit and when you get a standalone audit. I prefer to see them as standalone, but and even if you get reported as a standalone, or even if you get a standalone audit, it could be that the municipality is still going to report you as a component unit. That's fine too.
Yeah, and actually, it's a library that falls into that category. We have a standalone audit, and the good news is it's great for transparency. Bad news is we have to budget for the audit itself.
Right. But it is super helpful,
Great.
gotta say.
I think that's all I have in the Q&A. Does anybody else want to raise a hand or ask a question? Okay, back to you,
Okay.
Jamie.
So now we're going to jump into details. Okay, so let's start with the budget. Okay, so we kind of talked a little bit about this stuff before. Your budget is your target for revenues, expenditures, and cash balances for a given fiscal year. All right, so um, chances are, well, we've talked about this. So your beginning cash balances, that's a fund balance. That's not revenue. You've got your revenues minus your expenditures. That's your income for the year. And if you take your beginning cash balance plus your revenues, plus your budgeted expenditures, that's going to give you your projected cash balance at the end of the year. Now, it's important to know, right? Your cash balance really fluctuates during the year because you get a big chunk of taxes twice a year, and in between, you really get nothing, right? So when you're looking at cash balances at the end of the year, you have to think, okay, are they sufficient to carry me through whenever that low point comes? All right. So we always want to make sure we have an ending cash balance that is that's sufficient to operate all year round. All right. We don't want that ending cash balance to be zero. Um, some years, some people budget for zero, right? They try and match revenues to expenditures, and then they see how things come out during the year, and they think, okay, as long as we have revenues that aren't less than our expenditures, we should be in good shape. That's fine. That's one way of budgeting. Another way of budgeting is to say, what do we think is really going to happen over the course of the year? Are we going to have income? And is that so much income that we should think about spending more of it? Do we need net income in order to build up some fund balances for future expenditures? All different kinds of ways to budget. But the most important thing here is that when you're approaching that budget, you know why you're doing it the way you're doing it. In other words, if you're budgeting for revenues equal to expenditures, why have you made that decision? If you're budgeting for some income, why do you need that income? What are you going to do with it? So this whole budgeting process is really a thought process for you related to the overall needs of the library. All right. So when you're budgeting, there's really two things you're budgeting for. One is your operating needs, right? What you need just to run the library day to day. I want my clients to also budget for capital needs that are future needs that need to be accumulated over time. all right, for, like I say, the roof, that HVAC that we talked about, that I mentioned earlier. Um, I would like to see you budgeting for those things, as well as the operating needs. And the reason for that is way too often people go with that zero budget, right? Revenue, projecting revenues to equal expenditures. And then at the end of the year, they have money left over and they say, oh, that's great. We have money left over. Let's put it aside for future capital needs. All right. That's more of a random approach than a purposeful approach, right? I'd rather have you saying, we need this much money 5 years, 10 years out for those capital needs. Let's budget them intentionally, right? Rather than just watching for what falls out of the bottom of our budget and setting it aside. It's a little bit more intentional and much more helpful. Um, Generally speaking, right, you're not going to budget for a capital need in the year it occurs because it'll be too late, right? You want to budget to accumulate those funds so that they're there when you need them. All right. And then you also have to budget for those operational needs, that you're going to be that you're going to be incurring over the course of the year. All right. So I would have you think about the budget as it's your plan for the coming year, right? What are you bringing in? What are you spending? But it's also a chance to set your strategic priorities relative to the previous year. So when you're doing your budgeting, I think it's important that you ask, what happened last year, right? Did we have net income? Was it sufficient? Did we have a net loss, which often happens? Where do we have to cut, right? Where did we spend what we thought we were going to spend? Where did we spend more? Where did we spend less? And why did that happen? And do we want to fix that this year? Right. So it's not just take what we spent last year, increase it by 3%, and that's our new budget, right? I would have you really look at what you spent last year and relate that to what your spending plans are for the current year, where you're spending the money, where you're spending on programs, where you're spending on staff, where you're spending it on materials, right? Um, if you have a strategic plan, right? Are you allocating dollars in your budget according to the senior plan, that strategic plan, right? Um, are you emphasizing the areas and are you spending money appropriately in the areas that you want to be spending to further the strategic plan? Once you have your budget over the course of the year, you want to be comparing that budget to what's actually going on so that you can monitor those same types of things over the year. If you're under budget in a specific area, right, it's important to start asking the questions why? Why are we underspending it on materials, right? Why are we overspending on how did we get over budget in utilities? Look for those variances during the year so that you can make informed decisions about, not decisions, because that's the library director's job. So you can help the library director start making those decisions about how the budget might need to be, or how your expenditures might be need to be adjusted um, to get you back to the budget. And I like to say a lot of the time people have a materials budget and it comes in 30% under. And my question is that a good thing or a bad thing? A lot of people say, oh, that's a great thing. We're under budget, but you're a library. Those dollars were allocated. They were budgeted. You want to make sure you're actually meeting your budget on those items because otherwise you're underserving the community relative to what you budgeted. Okay. Last thing I want to say is that budget should be a reflection of your strategic objectives, right? It should be allocating money where it's most needed to achieve the strategic objectives of the library. And if you don't have those strategic objectives, I would encourage you to have a strategic plan that defines those objectives and really specifies them so that you're budgeting intentionally around meeting community needs as reflected in your strategic plan. All right. Your primary concerns, remember, you're holding the ladder. Your primary concerns as a board is that the budget be realistic, right? Is it realistically reflecting what you're bringing in and what you're spending? Um, is it demonstrating and contributing to your financial health? In other words, are you building up those balances that will enable you to weather a financial storm should it come, like this year when in Cook County, where taxes didn't come in until 3 or 4 months later than they were scheduled to? Are you accumulating balances for those capital needs? Um, is the budget achieving your policy objectives? In other words, if you have fund balance policies or investment policies, are you achieving those policies with the budget? Are you furthering your strategic objectives? We already talked about that. And then during the year, as we said, you want to be comparing actual spending to the budget to know that you're meeting expectations. And then lastly, your number one thing for funding the library is that levy, and you want to make sure you're following statutory requirements for passing the levy, so that that 90% revenue actually gets achieved for the library. All right. Meanwhile, the library director is running around taking care of all the details, right? They're making sure that they're estimating revenues and expenditures accurately, making sure that the library receives and records the revenues, monitors the expenditures, ensures controls are in place. All those activities that you want to make sure exist, they're implementing. Okay. So if you're getting into the implementation side of it, if you're actually starting to make decisions around expenditures, you're starting to go up the ladder. Okay. So 90% of your, so I'm going to stop there and let us ask a budget question or two if there is one. We got anything?
Yes, we do. Hang on, let me find it. Your discussion sounds like trustees are doing the budgeting. Is that right? Or is it the director who's mainly building the budget?
I'm sorry if I gave that impression. Absolutely. What's going to happen, thank you very much, is the library director is going to prepare and present to that budget to you as a sort of it could go iteratively. It depends on how you do it at your library, but it'll be a largely complete document for board discussion, right? They're going to prepare that budget, um, and then the topics that I've been talking about are really things for you to ask, right? You want to take that budget and say, is it meeting our strategic goals? How are we doing? How is it different from last year, right? Like, why did you make this change? They're going to show you, they might show you an increase in staffing expenditures by 4%, right? So why are we doing that? What's that mean? Why do we feel we have to do that, right? Those are the types of questions you want to ask about the budget, but absolutely categorically, you are not preparing the budget. The library director is. Thank you for that really important question.
Good feedback. Yes. And also I can see that in general, a lot of times libraries will have a president or finance committee that will be more involved in that iteration before it gets to the full board. So
Yeah.
great.
Yep. Yeah.
Any other questions on before we continue? I think we're good.
Thank you. This is why it's great that we're taking questions as we go along, because
Yeah,
these are very,
agreed.
very,
Thank you.
very
Thank
important.
you for
Thank you.
doing that.
Okay, let's talk a little bit about the levy. So, again, a few more definitions. Now, these are important because if you need to understand these definitions conceptually to understand the levy, otherwise you will get lost. Okay, so every year the library board, if you're a library district, and if you're a municipal library, it's going to be a levy passed by your municipality. Um, your levy is your request for property taxes. Okay. So when you pass your levy, that's just a request. This is how much you want the county to put on the tax bills for the library. It's not necessarily, for reasons we're going to discuss, it's not necessarily what you're going to get. What you end up getting is what the county extends for taxes. And we call that the extension. And that's what actually goes on the tax bill is the extension. And that's calculated based on if you're subject to tax caps. We'll talk about this more, but there's all kinds of formulas that the county has to apply to figure out um, what you can actually extend, what can actually go on the tax bills. So if your levy request exceeds the legal maximum extension, you're only going to get the maximum extension, right? If your levy request is below the maximum legal extension, you're going to get as the extension what you levied. All right. And then, of course, for budgeting purposes, not all of you collect 100% of your taxes. In more challenged, economically challenged areas, some people don't pay their taxes or may have trouble paying their taxes. So you might only collect 97, 95% of what's actually extended. So when you're budgeting, the library director has to take into account the collection rate, not just the extension. It's an important budgeting context. Okay, so a concept. So we have the levy, which is your request, right, for taxes. We have the extension, which is what goes on the tax bills after the county does its calculations. And then the money that you get to actually spend is based on your collections, which is a function of your collection rate. All right. So once again, coming to you guys with respect to your role, trustee's role in the levy, um, you want to be asking those big high level type questions. What's your fiduciary responsibility to the library with respect to setting the levy? Now, as I mentioned earlier, right, your fiduciary your fiduciary duty is to the library. If there are dollars available to you under the law, your fiduciary duties to the library, you should be seeking to levy as much as legally is available to you. Now, the only time I would say that becomes an exception is when the library director says, you know, really, we're so well funded and we're spending enough money, we really can't responsibly take in what we legally have access to. So let's hold back. We don't need everything this year, right? That isn't to say you shouldn't be concerned about the community, think about the community, but I just want you to have in your mind that your first duty is to the library as a board trustee. All right. So part and parcel of that is figuring out what the likely maximum tax extension that's available to you is and making sure your levy exceeds that by a fair margin. Okay. Um, as I said, as long as the library director can responsibly make use of all those taxes, I think it's your fiduciary duty to make sure that you get them. Um, the other thing to think about is if you ever held back, right? And if you ever levied less than the dollars that you had access to, that can have long-term implications for the library because under tax caps, those calculations carry forward. Now, there's an exception now based on a change in law we've talked about, but in general, if you levy less than you can, then if you're tax capped and you levy less than is legally allowed for you, right? That lower levy carries forward into future years and it affects all future years. So doing something one year can affect you for the long term. And the way you protect yourself against that, I mentioned the law, there's a certificate you can now file. So if you intentionally levy less than you're allowed to, and your tax cap, this applies to tax caps only, you can file a certificate with the county at the same time within 60 days. It says, we're intentionally not taking less than we can. Don't hold it against us in future years. You know, in future years, do your calculations, county, as though we had taken the full amount that was available to us. Okay, so if you're levying less for some reason intentionally, just make sure that you're filing that certificate of reduction at the same time so you can get back up in a future year. Okay, so you're thinking about those big picture questions. Now we talked a lot about tax cap versus not tax capped. Here's uh, sort of a chart that'll help you figure that out if you don't know. Um, whether you're capped or not. All right. So if you're a district library, you have two questions to ask. Am I in a tax capped county or am I in a non-tax capped county? If you're in a tax capped county, which is Cook, the collar counties, and downstate where it was voted, you're capped and you're going to be subject to the tax cap law, which we're going to talk about. If you're in a non-tax capped county, then you're not capped, and it's a different set of rules that apply to you for the levy, and we're going to talk about both. Now, if you're a municipal library, it's a little more complicated because if you're in a tax capped county, then you have to figure out, am I part of a home rule community, in which case I'm not capped, or am I part of a non-home rule community, in which case you are capped. So you have to parse through this. Downstate, if you're in a non-tax capped county, you're not capped. So it's easy if you're not in a non-tax capped county, but if you're in a tax capped county, it's a little bit tougher. All right. From your perspective, right, as trustees holding the ladder, right? We've talked about this. If you're in a position where the library can use all of the revenue that's available to it, your objective is to make sure that the levy provides for the maximum tax revenue you can get access to. That's my opinion. You just have to make sure that the levy exceeds the maximum allowable extension, and you're all set. And I'll say real quickly that it's pretty safe, although some boards may have problems with the optics. If you simply set your levy, in most cases, at 5% above the prior year's extension, right? Using that word intentionally, last year's extension, right? You'll be safe most of the time. That your levy exceeds the maximum allowable. And from a community perspective, you're never going to get more than the law allows. So if the law is only allowing for 3%, and you do your levy at a 5% increase, right? You don't have to worry, you don't have to explain to people why you're levying 5% more because you're only going to get the 3%, right? You're simply ensuring by increasing your levy 5%, you're simply ensuring that you get the maximum, right? So you don't have to worry too much if you're subject to tax caps. By and large, if you just work out your levy 5% above the prior year's extension, you'll be fine. The county will take care of the rest. Um, all right. Generally speaking, well, I'm gonna wait on the rest of this. We're gonna get to all of it. All right. If you ever wanted to go over 5%, so a few years ago, well, I got to go back. All right. So if you're subject to tax caps, the formula, the rule for what your new extension is going to be, right, is inflation. You get to increase the prior year's extension by inflation plus new property. We'll get into this in a little more detail in a second, right? Um, Generally speaking, um, inflation's 2%, 3%. In your new property is going to be a 0.5%, 1%. So you add those two things together, that's going to be how much in a capped situation your extension can go up from one year to the next. 5% is generally going to be way more than that, and you're fine. Some years, like a couple of years ago, we had 5% inflation, right? So inflation plus new property took your available increase above 5%. And under that circumstance, if you wanted to get all of the revenue that was available to you, you'd have to do what's called a truth in taxation hearing. It's just an extra step in passing your levy that announces to the community you're asking for more than 5% above what was extended last year, and therefore you have to do the hearing before you pass the levy. Now that's only for capped. Well, um, no. So say this. I'm sorry. I'm taking places where I hope I'm not confusing you. So that truth in taxation hearing is required for any time anybody, home rule or not home rule, goes over 5%, right? Anytime your levying is more than 5% over the prior year's extension, you're going to have to do that truth in taxation. All right. So why is the levy easy for trustees? You just want to make sure you're calculating the maximum extension. If the maximum extension is more than 5%, you want to make sure you're doing your truth in taxation hearing, and that's it. That's why it's easy for you. The director has to figure out what all those components are. They have to know what CPI is. They have to know what new property is. Now I've already hinted at this. Let's just go through an example of a property tax increase extension, property tax extension increase calculation would be for a capped district. It's pretty easy, honestly, right? So um, remember what you're getting from one year to the next is just inflation plus new properties. So here's a calculation. Let's see, for a theoretical library with a tax extension from the prior year of $720,000. All right, and it's the maximum extension from the prior 3 years, which is usually just the prior year, right? But let's say the prior year's extension was $720,000, and inflation at 2.7%, all right, is what you can just increase your tax extension by for inflation. And then let's say this district had 2.04 million for new property, which worked out to about 0.08%, a little less than 0.1% of its EAV. All right. So the 2.7% would bring it up to 740, and they'd get another $6,670 from inflation, from new property. That means that their maximum extension for next year could be expected to be $747,000. All right. If the library levies less than $747,000, they're only going to get what they levied, what they asked for. If they want to get the $747,000, they have to ask for more than that, right? And then if there's a mistake, so if you ask for 5% more, right? If there's a mistake and it turns out that new property is 12 million, right, you're going to be covered, right? So you don't want to ask just for that exact $747,000. Ask for a little cushion, ask for a little bit more if you're subject to tax caps. All right. So the key in this calculation, we know what inflation is. That's easy. The tricky part here is figuring out your new property. And what that new property is, by the way, I didn't say it, is that's like real new stuff. It's not just inflation, it's real new buildings, real new hospitals, real new homes, real new commercial properties. And most importantly, it's tax uh, tax increment districts, TIFs, that might be coming offline. And if we don't know about TIFs, someone wants to know about TIFs, ask me about that, because those are an important part of, those can be a big part of your tax base. That's special areas within a municipality that whose taxes have been siphoned off for up to 23 years. And when they expire, these economic development areas, they come onto your tax rolls in a big chunk, right, as new property. And if you don't tax it on the year it comes onto the tax rolls, right, you're going to lose that opportunity to take advantage of that new property in future years along the lines of what we were discussing before. All right. So again, for tax cap entities, it's pretty easy. What you get to increase your extension by from one year to the next, it's inflation plus new property. Now, if you're not capped, it's actually a little more complicated because it requires you to know what your district's aggregate property value is, okay? Because you have a maximum tax rate that applies to you, right? And you can tax at that maximum rate according to your property tax values. So, not that you necessarily want to do this, but just to give you the example, if, again, not tax capped, right? These are just the non-capped districts. Um, and I'll say non-capped districts. Let's focus on that. For the time being. Anyway, so if your property tax value doubles, right, you're only limited by your tax rate. So your general fund tax rate here, these are all the different rates. Um, there's actually a maximum tax rate for the general fund, which is your main operating fund. Remember that. Um, if your property tax value doubles, right, that 15-cent maximum tax rate, right, is going to double. Uh, Applied to twice the property tax value is going to double the available taxes that you have. Now, property tax value doesn't double, right? But it might go up by 10% from one year to the next, right? Which means applying that 15-cent tax rate allows you to increase your levy by 10%. You'll get that money, right? You can just follow EAV upwards if you can responsibly spend that money. Now, remember, if you're going up more than 5%, you have to do the truth in taxation hearing, right? But if you're not capped, way more important than inflation and as important as new property is, it's just the general increase in your property tax value. That's what's going to tell you how much you can tax. Now, that's for the general fund, and there's a couple other funds that have limited tax rates on them. The building and maintenance fund has a limited tax rate of 2 cents. The audit fund has a maximum tax rate of a half a cent. But for things like Social Security, liability, workman's comp, unemployment, things like that. Those have no rate maximum. For those funds, you can just levy what you need. All right. So if you know you have a certain amount of Social Security, you just levy for Social Security, and so on. So for your non-capped libraries, the most important thing is making sure that the library director has an accurate estimate of what next year's EAV is so that you can tax it fully if that's what you choose to do. All right. And usually that projection comes out in October in most of my clients, experience in non-capped counties. So if you can get that estimate before you do your levy, that's a helpful thing. All right. Now I think, um, yeah, we kind of talked to. So this is the non-capped calculation, right? You're just applying next year's EAV to those tax rates that you need, and then for the uncapped funds, levying what you need. Okay. So, as trustees, questions you want to be asking? Are we increasing our levy enough to capture both CPI and new property? Any new property we're overlooking? Is there a TIF expiring? Did you check on all the TIFs? Those are the types of questions you want to be asking. If you're not capped, um, you just want to make sure that you have a good estimate of what property value is going to be in the district for the following year so that you make sure you're taxing at your maximum rate. Okay, so that was a ton. And let's make sure there are no questions because I'm guessing there were.
Yes, there were a couple of questions. So first question, isn't it true that if you have a district that has had a growth in construction that exceeds the 5%, then you've lost that growth for all future periods unless you go back to the community with a referendum to increase the tax limit? The question asker says, I'm a trustee where, on the advice of an accountant who has not taken this into account, there's been a loss of approximately 16% over the past 5 years.
Yeah, so again, so a couple of things because it is a little bit complicated answer. So again, what the law allows, you're capped, obviously. What you're allowed to do is go up by inflation plus the new property, right? If for some reason in a year you don't increase your levy by enough to capture that new property, you're exactly right. Once you haven't taxed at the maximum you could get, right? Remember how the calculation works. It's the extension from the prior year or the maximum from the prior 3 years, but it's the extension from the prior year, we'll say, um, plus inflation plus new property, right? So if you didn't capture the full amount in a prior year, well, the base for the next year is going to be lower and it's always locked in forever. Now, there is that exception now that's allowed by the law starting about 2 years ago. When you do your levy, if you think or know that you're levying below what the cap is, you can file with the county this certificate. I want to call it a certificate of reduction. I don't think that's quite the name, but you can file a certificate with the county that says, we didn't levy everything we could ask for. We know we didn't levy everything we could have asked for. And next year, when you do our tax calculation, we want you to do that calculation as though we had. Okay.
Do they need to file that when they make the levy request? Is
Within
that the
60
timing?
days.
Okay,
Within 60 days.
great.
Okay. Now,
Okay.
under every circumstance, right, if you go over 5%, right, to capture that new property, right, then you have to do your truth and taxation hearing. If you don't do the truth and taxation hearing, then the county isn't allowed to honor your request above 5%, right? So if you go over 5%, when you file your levy, you also have to say, yes, we did the truth and taxation um, hearing.
And is that something you would ask for, or that's something that the county would come back to you and set when they receive your request?
I think by law, by law, you're required to do it. Um, I don't know. It's an open question if the county would actually catch you if you did, right?
Yeah,
If you made a mistake and you levied 5.1 and you were actually allowed to do it, would the county notice? I can't say, but certainly a taxpayer might.
got
And
it.
then they would object, and then they take you to court. You'd have to refund the money.
Got it. Okay, great. Don't want to get into that situation.
No, that's
Okay.
that's because no one ever comes to those hearings anyway, thankfully.
Right. Okay, next question. There's a few more here. How
Yeah,
do you
please.
know if you have a TIF district within your area that comes onto your tax roll?
Okay. So the best way is to ask the municipality, right? So okay, there's a couple ways. A lot of counties keep TIF maps on their websites, so you can go and you can search for the TIF map and you can look in the municipality and you'll see, exactly where the TIF is. Second thing is that any TIF is required to have an annual hearing, right? And the school districts are most affected by these TIFs, so they're generally right up on this stuff, right? So if you have a good relationship with the local school district, you can see what they're doing to either fight or stay informed about TIFs. But the absolute best way, in my view, is if any municipality within the library's boundaries, you just call either the development person there or the finance person and say, hey, what TIFs do we have? When are they coming off? Can we make sure that we know what the values are? Okay, so lots of different ways to figure out about TIFs.
Okay. Going back one question, can you reiterate for which type of library the certificate of reduction would be of use?
Sure, that's only for tax capped library districts. When it comes to tax capped libraries, municipal libraries with their own tax cap calculations, probably true for them too, but you might want to get just a legal affirmation of that. If you're a municipal library where your levy is blended in with the municipality, then it would be governed by the municipality, most likely.
Right. Okay, we have one more question going back to budget before I ask that, are there any other levy and taxation questions since we're on the subject? Okay, then the budget question. Going back to the primary budget concerns for the library board, and comparing actual spending to expectations. What is the recommendation for frequency of the monitoring, monthly or quarterly?
I think it helps to have a monthly report. You might want to like really scrutinize it quarterly. Yeah, if you're going monthly, there's a lot of variation, right? You had a big bill this month and a little bill that month, So certainly at the halfway point during the year, you want to see how you're doing. Um, 3 months into the year, maybe it's not so useful. I think having it at each board meeting is a good best practice, just so you can keep an eye on things. Something jumps out, you have the opportunity to ask a question. But the real, I think probably midpoint in the year is really the first hard look at what's going on. And then maybe 3/4 of the year, you can look again and see, are there any final adjustments we want to make in these last 3 months? And then by month 11, it's too late anyway, right? So I'd say the critical, yep, thinking as I'm talking as I'm thinking, I think the critical junctions there are 6 months and 9 months. 6 months so you can make adjustments, 9 months so you can do your final plan.
Okay, sounds good. All right, I think you can move on.
All right. Fund balances. This is where a lot of libraries have a lot of questions because you can accumulate a lot of money, and you can run out of money as well. But a very frequent question I get asked is, do we have enough money or do we have too much money? All right. So we hinted at this before, right? You should maintain sufficient balances, and we'll call it, usually cash and fund balances are kind of similar, but we'll talk in terms of cash, right? But you want sufficient cash so that as your cash fluctuates during the year, you want to have sort of 3 months of cash for your operating accounts. Forget about the capital ones, okay? Because they're different. But for your operating funds, I think if you have a minimum of 3 months cash, um, at the low point in your cash cycle, I think you can consider yourself healthy. And if you have 6 months in cash at the low point, you can consider yourself very healthy. Now, um, that isn't to say you might not want to have, say, 12 months of cash in the low point. The difference is that that extra 6 months, right, as long as it sits in your operating accounts, is unrestricted. That is to say, you can use it for anything. You could use it for a special project. You could use it, well, it's unrestricted. You can use it for anything you want. Um, as soon as you take that money and put it into a capital reserve, right, it becomes restricted. So you can't access it anymore. So you might think of the library as, we want to have minimum 6 months, but as long we'll hold up to 12 months just to maintain flexibility in our operating funds. Everything over 12 months um, goes into the capital reserve. Why 12 months? Because 12 months is kind of the point at which people start saying, that's just too much money. I don't know why the library has that much money. That doesn't seem right. They should be reducing our taxes, right? And you might say, yeah, we do have 12 months, but that's really for something. They'll say, well, I don't care. It's too much money. Um, so that's why you want to sort of balance where your cash sits if it's starting to get to that 12-month point. All right. Um, Once you get to more than 2 years worth of expenditures, right, of cash, that's when you start being subject to tax objections, right? And there's all ways of approaching that 2 year calculation. So you don't want a tax objection. If you're starting to get above 12 months, I think of fund balances in your operating accounts, I think you really have to start thinking about moving some of that cash into a capital reserve so that it's clear to the public that you're not just amassing money. All right. Once money's in a capital reserve, you can establish that by resolution. Um, you have to have a plan for spending it on specific things like roofs, HVAC, capital maintenance, new projects. Once it's in there, you can't get a tax objection for it. You can point to that money and say, that's there for a reason. We're allowed to accumulate it. All right. Um, what you want to make sure as a library board is the types of things that we've just been talking about. Are our fund balances appropriate for our needs? Do we have a use for those? Are they intentional, right? Is it too, or are we just accumulating money for the sake of accumulating money? Now, we didn't talk about the opposite, right? What if your fund balances are really low? Well, then you have to start making important budgeting decisions, right? Do we need to budget a surplus so that we can bring those fund balances up, right? Those are less common for my library clients. My library clients, believe it or not, often if it's a problem, it's because they have too much money. All right, so do we have fund balances to provide protection against emergencies, unexpected occurrences, like what happened in Cook County this last year? Are fund balances providing for those known future needs? By the way, if you don't know what your future needs are, right, you should have some kind of capital needs analysis that tells you what those future needs are going to be, right? If you don't have any idea of when your roof's going to give out, when your HVAC is going to give out, your elevators need repairing, your floorings, new furniture, things like that, it's worth the expenditure to have someone come through the library to tell you what's going to give out and when and how much it's going to cost to replace. Because then you can start making an assessment of whether or not you have enough money to provide for those things. Okay. Um, you know, if you're in a position to do it, right, and you're sort of in that 6 to 12 month band above and beyond what you need um, for your capital needs, you might start thinking, hey, we have some money. Is there something we could be doing that would allow us to better meet our strategic priorities? Right? Like, is there something we could do here for the community, a one-time expenditure to use that money that allow us to serve the community, in some way that we're not currently that's consistent with our strategic objectives. All right. Because it's all about using your resources to serve the community. It's not about amassing huge amounts of dollars for no reason in particular. The dollars are there to be used and to be preserved to the extent preserved prudently. Um, the library director is going to be way more in the weeds, right? They're going to be thinking, how am I allocating my levies? Am I levying? We talked about the various funds that you're levying in for the various purposes. So they're going to be allocating the levy across those purposes, across, FICA, IMRF, things like that, to make sure that those individual funds have sufficient money. They're going to be watching those cash balances to make sure that they're adequate. They're going to be watching the capital needs and the balances in the special reserve to make sure that they're adequate to meet those needs. And look for opportunities to bring to you to spend available fund balances, right? So you're evaluating those opportunities. The library director is bringing the opportunities to you. All right. All right, let's talk a little bit about financial policies. Then I think we're getting towards the end. Or well, let's stop at the end of fund balances and just see if we have any questions here.
I'm taking a look, and yes. Does the library have a fund balance policy, or should they?
The library should have a fund balance policy. I don't know if the library does.
Mhm.
So I've written fund balance policies for libraries. In each case, um, again, you want the fund balance policy to reflect the strategic objectives of the library. And so, like I say, I would like to see the fund balance policy written to guarantee a minimum of 3 to 6 months of cash at the low point in the cycle, which doesn't necessarily map to a fund balance of 3 to 6 months, right? That depends on your accounting and your year end and things like that. But anyway, that's what I like to see. But I also like to see, you know, how those funds get allocated, how that policy gets applied to individual funds, what you have to say about a special reserve, right? Because your fund balance isn't just for the operating funds, it's for the special reserve. It can also inform, like, I also like a policy to sort of explain in there why the policy exists the way it exists. It's just helpful for new trustees to be able to go read a policy and say, oh, that's why it's not just random 3 to 6 months. It's for this reason, or this is why we're allocating this much to this fund or that fund or whatever. So yeah, you should have a fund balance policy. You should have an investment policy. I don't know if we're talking about that today, but you should have those financial policies. And remember, sorry, can't help it. Um, Fund balance policy, all of your policies are a reflection of decisions that prior boards have made with the intention of informing future boards, right? So that the new boards aren't just redoing old work, you know, with no uninformed by the guidance of past trustees. So you could think of your policies as sort of your message to future boards as well, right? So that they can come in and understand where the library's been in the past and a little bit of how it got there and why the current way the library operates is the way it operates. It gives some continuity. Okay.
Okay. Okay, that's a good segue into financial policies.
Financial policies. Oh, there we go. All right. So, well-established financial policies. Thank you for the question. Give clear guidance as to how given situations should be addressed as they arise so that you don't have to make decisions from scratch, right? We go to the policy, we see what we're supposed to do in this situation, and it tells us, what do we do if we have more than 100% fund balance? What are past boards telling us about what we should do about this situation? Because they thought about it. Um, they also delegate responsibility so it's clear who should be doing what. And this is especially true of your investment policy, right? The investment policy is going to say exactly who is responsible for making investment decisions, reporting investment decisions, monitoring the investments, things like that, so that no one can say, well, I don't know how we ended up investing in, dog kennels in Spain. Um, I thought you did that. No. And when it goes bad, well, it wasn't my responsibility, right? So you want clear lines of responsibility in these policies. It also protects employees and board members, right? Because if you get accused of something, you can say, well, here's the policy. We followed it. And, that wasn't my responsibility. Or it was my responsibility, but I did exactly what I was supposed to do. And the fact that it went bad was not a function of me doing anything particularly bad. It was a function of bad policy, right? So it's there not just to guide you, but also to protect you. And that avoids confusion and blame, right? You just point to the policy. Did you follow the policy? Did you not follow the policy? Were you authorized to make the decision you did, or were you not authorized to make the decision that you did? Okay. So part of that is reviewing regularly every couple of years, right? These things don't change often, but the process of reviewing lets you update the policy, but it also ensures that people are informed of the policy at the same time, right? So even if you don't change a policy, you review it, everybody knows what's in there. Policies also reflect and promote the culture of the library. What are you doing with homeless in the library? What are you doing if someone does X, Y, or Z, right? Your policy towards those situations, right, is um, establishes, I'd even go that far, establishes what you want the culture of the library to be, right? So it's an important statement. Um, how you approach various situations from your policies, right, as to how you want the library to operate. And as I said before, they're the institutional memory of past decisions. I mean, policies got there because questions arose and someone said, well, how do we want to handle this situation? They spent time, they thought about it, they made decisions, and they said, this is how we think this should be done. So you don't have to reinvent the wheel when that situation comes up again. All right. Financial policies to have. All right. So there's a mess of them. Bank accounts and credit card policies. What are your accounts for? What credit card? What if you have credit cards? who's getting those credit cards, what are they doing with them, what are they allowed to charge, what's their responsibility if they don't make a payment, things like that. Set spending limits, what can the director spend 25,000 bucks at their discretion or 5,000 or 500? How much discretion do you want to give the library director over spending? Say if it's not in the budget or if it's something that comes up. Fund balance policy, we've already talked about a bit. Gift policy is another one, right? Gift policy is a great one to have. Generally speaking, you're going to get a gift and it's going to be 500 bucks, right? And it's going to go into your operations. No one's going to think. But someone might want to give you a painting, right? What are you going to do then? Are you going to accept it? What if they gave you a nude painting, right? Then what? Under what circumstances do you accept a gift? What happens if you accept a gift? Do you sell it right away? Most gift policies, just for nothing, say if you get a gift that is not monetary, you're either going to reject it or you're going to accept it and sell it as soon as humanly possible, right? So these questions of what to do with a non-monetary gift don't apply because you're sorry, we don't care that it was a 1929 Rolls Royce. Policy says we sell it, right? We're not going to because once you do that, then okay, it's not a 1929 Rolls Royce. We're gonna display it. But what if it was a 1935 Rolls Royce, right? It's like so no, we just have gift policy. If it's not money, we sell it. We could talk about those larger restricted gifts, but I don't think we'll get into that right now. Okay. You get a legacy gift, someone dies and gives you a ton of money. That's a different type of thing. Okay. Internal financial controls, very important, right? How are you making sure that, and this is where your fraud comes in, right? Do you have, and I think most of your investment policies will say that you have or will require you to have controls in place that protect that reasonably. I'm trying to think exactly what the wording is, but it's basically that they're designed to reasonably protect you against fraud. Like no controls can absolutely protect you against fraud, but you can design policies to policies that reasonably protect you from fraud. And what that means is clear lines of authority for paying bills and using credit, like who has the authority to pay bills and enter into contracts, right? If the wrong person enters into a contract, they get fired, right? Because they weren't authorized to do it. Separation of duties. People taking in money and people spending money aren't the same people. Aren't the same people. People approving bills and people paying bills are not the same person, right? To say, oh, this is a bill. I'll approve it and I'll pay it. No, you want someone approving the bill, someone else paying the bill, so that either of one of those doesn't seem right. One of the two people can speak up. So that's this concept of separation of duties. You don't have one person with absolute control over bank accounts. Maintenance of records. You want to make sure that your accounts are being reconciled every month, so that the bills being paid can be seen to be the bills that were approved. The payroll is consistent with the approved payroll. You want to avoid conflicts of interest, so that someone's not hiring their cousin to do X, Y, or Z, and that you have receipts, things like all those types of things that let you verify that the finances are being properly run in the library. Now, again, it's the responsibility for this is generally delegated to the director or the finance director if you have one, right? But your responsibility as trustees is for making sure that these things are in place, right? So you can go back and you can ask your director, tell me about our financial controls. How do we know there's no fraud how can we be reasonably certain that there's no fraud going on within the library? What are you doing? Just bring us up to speed on this so we're comfortable. Okay. Next policy is investment policy. All right, that would be how you invest your money. And if I will just tell you right now, if your money is sitting in checking accounts or in a savings account in the local bank, right, and not earning market rates of interest, you're losing a huge opportunity to generate money for the library. I mean, this could be tens, depending on the library, tens or even hundreds of thousands of dollars that if you deploy properly, because the local bank is all I can tell you from experience, the local bank is not looking to do you any favors with interest, right? If you're not asking the question, if you're not seeking to maximize interest, and just leaving it to the bank, they're probably not giving you maximum interest. If you're not managing your money in and out of savings accounts, between savings accounts and checking accounts, you're probably not maximizing interest. So that's a question you can go back and ask your library director. What are we doing to make sure we're earning interest? Rates are coming down now, but they've been high for a while. You should be able to earn mid to high 3% on your money, on your fund balances that you're not using actively. All right, special reserve fund policy, we talked about that. That's where you're going to accumulate money for a future need. If you have a need that comes before you can pay for it, you might have to look at debt options. That's something I think we're not going to cover today. Travel expense and reimbursement policy. You want clear travel and expense reimbursement policies that leave no doubt about what you'll cover and what you won't. And this is probably one of the clearest places for, I wouldn't call it fraud, but I'd call it abuse, right? Um, so anyway, you want clear policies around that. All right. So I think just in talking about it, we've covered some of this stuff. Here's example fund balance policy. The question was already asked. Um, You'll state what the purpose of the policy is, in this case, established to provide financial stability, cash flow for operations, and the assurance that the library will be able to respond to emergencies with fiscal strength. So sort of a general statement there. I'm going to say, these are all examples taken from fund balance policies. Fund balance target should represent at least 6 months of operating expenditures. Balances above the 6-month target may be transferred to the special reserve fund. May be transferred, don't necessarily have to be transferred. You might add on to that above 12 months, they have to be, right? Special reserve fund, capital projects are funded through the special reserve fund. Sorry for just reading this, but and then your special revenue funds. Sorry, I got to read what I've written here. Just that those special revenue funds, IMRF, things like that, have enough to cover their expenses. That's it. All right. Internal controls for a minute, and we'll keep moving here. I'll try and finish by 11:30. Give us time for questions, and I'll hang out as long as people want to have questions. But internal controls, board should approve all expenditures, right? Not necessarily before, right? Well, you've got your budget and you've approved the budget, but when the expenditures before those go out, you should have a list of those checks, electronic and credit card payments that you're going to be approving to pay. Separation of duties we talked about. You might want double signatures on all checks. Most of my clients do not have double signatures, but maybe over a certain amount, if it's over 5,000, you want double signatures, maybe something like that. You want positive pay and positive ACH on all your accounts. If you don't know what I'm talking about, go find out if you have it. Positive. This is check fraud. ACH fraud is where so much of the fraud's happening right now with people whiting out or leaching out names and putting in new names on checks. You tell the bank, you either give them a specific register of all the checks that are approved, and if check comes in, it's not on the list, they're not going to pay it. If they do pay it, it's their problem, not your problem. That's one level. Another level is you give them a list of vendors, and as long as it's under a specific amount for each vendor, they're able to pay it. So you can come at this from multiple ways, but the banks should be your allies in making sure there's no ACH or check fraud. Um, you can have a board approved internal controls document that describes your internal controls procedures. Make sure your agendas take you through all the activities that are happening related to those financial controls, monthly bills, your warrants, your AP list. These are all just ways of monitoring things. Detailed monthly financial statements, right? You get those, you get that board report monthly of your financials. You look at it, right? And it includes budget versus actual, so you can see where things are go awry. And everything needs to be supported by receipts, right? Especially on the credit card side, right? There's a charge. You want to see a receipt before you reimburse the employee for that expenditure. Um, we probably beat this horse to death at this point. If you're still confused about internal controls, read this page. I won't. So again, responsibility for roles. You're overseeing. Oh, this is an important point. You as trustees, right, are responsible and have the ultimate responsibility for the fact that these internal controls are in place and get executed properly, right? You're not implementing them. Management is responsible for implementing them, but you are responsible for making sure they're there. That's your responsibility. Combination management staff is actually executing the controls. The auditor is outside of the external controls. Your auditor comes in and doesn't necessarily specifically test your internal controls, but in the process of doing the audit, um, keeps an eye open for where internal controls might fail and will notify you in its letter to you of weaknesses in your internal controls. So that's another reason why an audit is super helpful. Okay. Uh, Now, if you're a smaller district, right, might be a little difficult, so you have to be extra vigilant because you can't afford necessarily the staff to separate duties, right? So there, as a board, you want to be more attentive to the possibilities of fraud. And believe me, it happens in the most I don't even want to say unlikely of situations. People you would never suspect, and you have no reason to suspect, right, can get trapped uh, by circumstances, let's say, into committing fraud. And it's not like they set out to commit fraud. But people can have a change in personal circumstance that causes them to do something that is unwise, right? Or spend money, library money, in an unwise manner, right? And if you're too small a library to have proper control so that those things can slip through the radar, you as a library board need to be vigilant, and think of ways to test and think of questions you can ask to make sure that things are being done properly. Keep your eyes, if you don't have proper internal controls for various constrained reasons, make sure you're being extra vigilant about the opportunities for fraud. So that's the best way I can say it. Um, so yeah. So anyway, so make sure to the extent you can, your controls are in place. If you can't have controls, um, if you can't have controls, be extra vigilant. And lastly, I guess here, make sure that people aren't blowing off the controls, right? We had all the controls. I don't understand. Well, people just weren't following them, right? Make sure that these controls, especially as employee turnover happens, make sure that those controls are honored and implemented and followed. Okay. Three elements of fraud: need or pressure, right? Someone all of a sudden has a need, as whatever, someone got sick and they had a hospital bill. They couldn't possibly pay it. So they're like, well, maybe I'll pay it back. Rationalization. Listen, I work hard. I'm underpaid. I can take advantage of this thing no one will ever know, right? an opportunity. Bad financial controls open the door for fraud. Segregation of duty. I'm spending time on this because it happens. Believe me. Segregation of duties. Who's authorized to execute the transaction, record the transaction, pay for the transaction, owns the asset, right? You want to make sure these things are separate. So if there's anything going on, someone can say, "Hey, wait a minute, that doesn't quite look right." Um, Here you go. I think we're wrapping it up here. Um, Primary policy concerns for you as a board. Policies have to conform to the law, and there are laws related to certain policies, right? Are we viewing our policies according to our policy, right? Your policy might be to review policies every 2 years. Are you doing it? Do your policies give appropriate latitude to administrative authority, right? Excuse me, you don't want to absolutely tie people's hands. You want some flexibility. Do they reflect your vision for the operation and the culture of the library? And because that's important too, right? The policies reflect the culture of the organization. Okay, library director is going to be primarily focused on implementation. Um, so here you go. So just to summarize, engaging with your library director about library finance, you want to work together so you're on the same page with respect to how you're budgeting and all your policies. You want to understand where your revenue streams are coming from and what you can do to have leverage over those. Should the library director be looking for new sources of revenue? Do you need revenue, grants, donations, things like that? Um, Make sure you're informed of the library's financials and the annual audit. Those are super informative, right? They're telling you a lot of information. They put this stuff in front of you monthly, and there's a reason. I wouldn't say there's a reason for it, but I would say you can extract a lot of information and a lot of knowledge from these reports. Review the invoices, get to know your vendors. So if you see an invoice that's a new vendor, who's that again? Ask questions if you don't understand something. All right. I think we're basically done. Oh, one last thing. So we've talked a lot about budgeting here, right? And the budget is, just remember, a budget is a 1 year snapshot, right? It's not telling you where you're going in the future. It's not telling you your trajectory. So I'd encourage you also to maintain a financial projection so you can see where your current trends are taking you. Are they taking you to a place of financial health, where you can sustain fund balances and pay for your capital costs as they arise? Or are they signaling that there's a problem that you're drawing down fund balances over time so that you need to make small changes now that can bend the financial trajectory of the library so that it is healthy for the long term, right? And a budget won't tell you that. A budget only gives you what's happening next year. The only way you can get that bigger picture is by having that forecast that includes your future financial needs. All right. Um, Now I think we're at the summary. Remember, you're holding the ladder so that the staff and director can do their job. Um, you want to keep your eye on budget versus actual. How are your investments doing? You want to take care of the budget and appropriation ordinance. You want to take care of the levy and make sure you're asking for as much money as possible. And that's going to be, well, the B&A and levy is annual, but monthly, you're going to be wanting to keep an eye on this stuff. Occasionally, review your policies, establish that strategic plan, and make sure you're spending money according to your strategic plan, right? And become informed on implementation. It's nice to have the youth services director come and tell you what they're doing once in a while, or the adult services, or the programming director, or whoever. What's going on with your makerspace, right? Have people come and give you presentations about what's actually happening in the library. And then once in a while, only rarely, are you going to become involved with an administrative responsibility, right? It has to be really big before you guys get involved. And I think that's it. Yeah. So if you have questions, always my door is open. Give me a call, email me. And lastly, truly lastly, if you want credit for this with your iLead Trustee training badge, for this seminar, there's the QR code to scan. So hopefully we have some time. That went way longer than I expected it to, but hopefully we have time for questions.
Sounds great. Thank you, Jamie. We do have a few questions. So let me start off with a question about positive pay. So when you talked about bank accounts and fraud prevention, you mentioned a service called Positive Pay. With Positive Pay, does that mean the library would provide the bank with a list of all vendors? How would they maintain such a list?
So different banks have different ways of addressing positive pay. So you have to talk to them about it, and there's all different ways. But in a nutshell, positive pay means a bill or not a bill, a check doesn't get honored or an ACH doesn't get honored unless there is evidence that it's valid. All right. So you're informing the bank some way of what they're allowed to pay. You know, if it's not on this vendor list that we provided you and under this amount for each of these respective vendors, then don't pay it. That's the highest level, right? A second level is that you can do your checks, do your check approvals at your board meeting, this vendor for this amount, and you can upload that specific check list to the bank and they'll cross check it. If the amount doesn't match and the vendor doesn't match, they won't pay it. And that's very specific, right? It can be done electronically. It can be done where they get the ACHs all set up and then someone has to log in and click each one, send each one. There's positive pay, there's reverse positive pay, it goes on and on. And it's just different levels of control, however you want to do it. But if you don't have positive pay, you're asking for fraud. I can't say it more clearly than that. Um,
Really good advice. Okay, second question. So the board passes the BNA ordinance, and then should we be referring back to that throughout the year? I'm still not totally sure of the purpose of that ordinance.
Great question. That's fantastic because the answer is no. Like that BNA has nothing to do with any, well, it's loosely guided on your budget, but it has nothing to, like it has nothing to do with your actual spending, really. I mean, the only time the BNA ever comes into play is if for some reason you go over an appropriation in a specific area. So basically what the BNA is, it's called the Budget and Appropriation Ordinance, but it basically line by line and fund by fund gives a maximum dollar that you're allowed to spend on any given thing, right? So you take your budget, which is what you're actually going to spend, right? And then you make an allowance for going over the budget, right? And that could be what goes into your B&A, right? And so the expectation is you're never going to go over any of those things. Now, it turns out most attorneys that I know of, if you go over your appropriation in one area in, say, a fund, they say you have the flexibility to take dollars from a different appropriation and move it around within fund. Across funds, not so much, right? But the general idea is that appropriation is just setting you up um, for being able to spend money during the course of the year. The other use for the appropriation is that your levy can't exceed your appropriation. All right. So let's say your spending is going up 2 or 3% or something like that, but your levy is going up. Let's say you're not capped and your EAV is going up a ton. So your levy is going up 10%. All right. You can't levy more than you appropriate. So here again, even though you know you're not going to spend anywhere near a 10% increase, right? Your appropriations have to add up to an amount that's greater than your new big levy, right? So the appropriation is doing two things. It's making sure that you have room to spend whatever you happen to need to spend in the coming year, but then it's also making room for any outsized increase in the levy that you might have. And we could go into all kinds of details, but you might want to, for some reason, triple your Social Security levy, right? To bring the fund balance up. Let's say you have a huge negative balance in your Social Security fund, right? That's one of those special funds and it's negative, and you go, oh no, we want to bring that balance up and we're going to do it by levying, right? So you need to levy 3 times your annual expenditures to bring the fund back up. I'm exaggerating, obviously, right? So your appropriation is going to be three times, what your annual expenditures is going to look ridiculous. But the only reason you did that is because you wanted to do the outside levy. So your appropriation has to be bigger than your levy, has to be bigger than your expenditures. But once it's taken care of those things, you can kind of ignore it, you know. And if you ever do go over your appropriation, the solution is just to pass a new, amend it and repass it. So it's not a thing.
Great.
It's your actual budget, which is very different. That's what you want to be watching over the course of the year.
Great. Thank you for that answer. Let's see. While waiting for other questions, I just want to let all attendees know that if you look in your chat, the team over at ILA has put the link for claiming your badge from ILEAD Trustee, Illinois Heartland's badging system in the chat, and also Jamie's email for contact information. So please check that out if you have not had a chance to pull that information. Do we have any other questions? I think you may have covered it all.
Good. We wore you out. So
Yep, you've covered a lot of ground. So,
it was a
really
lot.
want to thank you, Jamie. I want to thank everybody, all the trustees attending this morning's webinar. We appreciate all of you sharing your dreary Saturday mornings with us. Jamie, your expertise and depth of knowledge and vast breadth of knowledge has been
Sorry
really
about that.
helpful, really helpful.
Good. I hope
Um,
so.
Great. So as noted earlier at the start of the webinar, in case you missed it, on Monday you will be receiving a link to the recording of this webinar, and you will also receive a link to an evaluation form, which we really hope that you will complete. We love to hear your ideas for other webinars, and many of the webinars, actually, the ideas for those topics do come from participants like yourselves. So we really appreciate hearing from you. Also hope that you will consider joining the Illinois Library Association if you are not already members. Trustees can join for an annual fee of $75, and this will provide opportunities to connect with over 400 individual trustee members from around the state, and you receive discounts on conferences and events, opportunities for leadership growth and recognition, and the bi-monthly trustee newsletter delivered directly to your inbox. Our next spring webinar is April 4th, and the topic will be Empowering Patrons Through AI Literacy, led by Bree Kirsch. That'll be followed in May on the 9th by a webinar on book bans and intellectual freedom for trustees, both super timely topics. We hope you'll join us. If you look in your chat, you will see a link whoops, hang on a second. If you look in your chat, you will see a link to the trustee newsletter, and also a link for the Google form where you can submit your feedback for today's webinar. All registrations will receive 3 recordings, and if you register, you will be able to participate in all 3 webinars. And let's see, what else do we have for you? We have in the chat also the link to join as a trustee member. If you join as a trustee member, you are also welcome to join us on the Illinois Library Association Trustee Forum. This is a volunteer group of ILA trustee members that get together to talk about what topics might be useful at future webinars such as this, at the ILA conferences, and also other issues of interest and ways to get education out to trustees around the state. Our next trustee meeting is Thursday, April 9th in the evening. Everybody is welcome to attend. And let's think. Finally, if you know any great trustees, upcoming is going to be the ILA Trustee of the Year Award. So we hope that you will nominate a fellow trustee that is going to be a great follow-up recipient to this award. The link for that is also in your chat. I'll give you a few minutes to take a quick look inside the chat to capture any links if there's anything there you want to take advantage of. Otherwise, I hope you have a great Saturday. Stay safe, stay dry, and stay warm. Thank you for attending.
Thank you, everybody. Take care.